Hello everyone and welcome to ticker.com news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. On the economic front this week, China and the US economic news got investors' attention. US rate hike worries, worsening real estate market, and uneven economic rebound in China drove financial market sentiment worldwide. So let's start with the United States. Seasonally adjusted retail and food services sales rose 0.7% in July from the previous month and 3.2% from the year earlier, after consumer spending held up despite rising prices and multiple rate hikes. Sales at gas stations rose only 0.4% from the previous month, but plunged 21% from a year ago, despite a jump in gasoline prices suggesting that higher gasoline prices are impacting consumer behavior. From a year ago, non-retail stores, which are dominated by online store sales, jumped 10%, and food services and drinking places jumped just close to 12%. But department store sales declined 2.3%, and building materials and garden equipment stores fell 1.5%. Retail sales data showed consumer may be resilient, but spending patterns are changing, and large ticket item sales are facing headwinds. Turning our attention to Europe, inflation and GDP data dominated economic news in the week. Inflation in the euro area slowed to 5.3% in July from 5.5% in June. Eurostat confirmed on Friday, and the inflation rate matched the estimate released on July 31. Core inflation, which excludes volatile food, energy, and tobacco prices, held steady at 5.5% as previously estimated. In a separate report, the Statistical Agency for the Currency Union confirmed that the economy expanded 0.3% in the second quarter from the previous quarter, matching the expectations set by some economists. In other news in the region, the UK consumer price inflation slowed to 6.8% in July from 7.9% in June, following weaker energy prices, the Office for National Statistics reported Wednesday. Despite the weakening of overall inflation, core inflation stayed at 6.9%, sending a signal to investors that the Bank of England may have to continue with its aggressive rate hike stance. UK retail sales fell more than expected, 1.2% on a monthly basis in July, reversing 0.6% increase in June. UK retail sales declined for the first time in 4 months, and on a yearly basis, the fall in overall retail sales deepened to 3.2% from 1.6% in June. Let us look at economic reports from Asia, and we're going to start with Japan. Japan's GDP expanded for the second quarter in a row on rising exports and falling imports, the government data showed. The GDP in the second quarter accelerated to 1.5% from the upwardly revised 0.9% increase in the first quarter. The economy has been on the mend despite the weak consumer spending, but it was the international trade that drove most of the gains. Now turning to China, things are not looking as rosy. In China, economic reports highlighted ongoing weakening activities, rising jobless rates, and worsening property market conditions. From a year ago, industrial production slowed to a rise of only 3.7% in July, and retail sales slowed to 2.5% from a year ago. Urban jobless rate rose to 5.3% in July from 5.2% in June, and the statistical agency said it will no longer provide youth jobless rate data. Youth employment rate among 16 to 24 years rose to a record high of 21.3% in June from 20.8% in May. The statistical agency reported this in the previous 2 months. The latest week set of data prompted the central bank to lower rates, but the rate cut is not likely to change much. The People's Bank of China unexpectedly lowered its one-year medium-term lending facility rate by 15 basis points to 2.5%. The central bank also lowered its 7-day reverse repo rate by 10 basis points to 1.8%, responding to weakening economic data released this week. Property investments declined at a faster pace, and weak property investment dragged down growth in fixed assets investment to 3.4% in the first 7 months to July from 3.8% in June. Property investments accounts for one-fifth of all fixed assets investment and contributes to about 14% of GDP growth. Private investment continues to remain subdued and declined 0.5% in the first 7 months compared to an increase of 7.6% by the state-owned enterprises. Moving on to India, inflation news dominated the market. Wholesale inflation index declined 1.4% in July following a fall of 4.1% in June, the Office for Economic Advisor reported Friday. Inflation fell less than expected after fuel prices declined 12.7%, but overwhelmed by more than 7% increase in food and primary articles. Consumer price inflation rose above the RBI's, Reserve Bank of India's, upper limit following a larger than usual unseasonal hike in food prices in July. The consumer price index accelerated to 7.4% in July from 4.9% in June, the statistical agency reported on Monday. In summary, inflation has remained a worldwide problem. Global policymakers are still running economies with interest rates that are not restrictive enough in order to avoid dipping economies into recession. Let's look at what happened in currency market. Currency markets saw some wild swings in Russia and in Argentina. The Russian ruble plunged to 101 against the US dollar and extended this year's decline to 38% on the growing list of negative factors. Rising government deficit, mismatch of imports and export receipts, and expectations of weakening demand of energy from China and India contributed to negative sentiment for the ruble. Russia's current account surplus plunged 85% in the period between January and July from a year ago, denting the sentiment further. But by Friday, ruble managed to rebound near 94 against the US dollar as the central bank and finance ministry worked out plans to lift the ruble higher, including a possible large rate hike. In January, the ruble traded at about 66 to a dollar, but lost about a third of its value in subsequent months. Moving all the way to South America, in Argentina, peso accelerated its slide after the government carried out a sharp devaluation and brought the official exchange rate in line with the parallel rate to stem currency outflow. The central bank devalued peso 18% to 350 against the US dollar and lifted rates by a whopping 21% to 118%. The Argentine peso plunged after Javier Milei, a far-right lawmaker, came first in primary elections that will help determine the country's next president. Moving on to global stock markets. Global stock markets fell for the third week in a row on the worries of rising rates in the United States, weakening economic conditions in China, and looming recession in Europe. Investor sentiment is shifting as US and European markets after stock valuations are running ahead of the weak earnings growth after 9 months of rally that halted in late July. Moreover, bond yields are hovering near highs not seen since the last October, and the yield on 10-year US Treasury bonds jumped near 4.2%, and 2-year Treasury notes traded at near 5% rather. The latest minutes of the Fed's policy meeting held in July showed rate hikes are possible in the next meeting as participants worried about elevated inflation. The possibility of a rate hike contrasted with the widely held belief that the central bank is likely to pause rate hikes this year, put markets on a negative downward slope. Policymakers decided to increase the rate hike by 25 basis points at the end of two-day meeting in mid-July, but many market participants at the time forecasted the Fed to pause for a while. But that seems to be not the case going forward. But the minutes of the latest meeting showed that the most participants worried that inflation is too high and the interest rates may have to be lifted to curb economic activities. Despite the multiple rate hikes, inflation has still hovered well above the Fed's 2% target rate, and several policy committee members noted that. While policymakers are talking about the need to bring down inflation to 2%, but at the same time, committee members are not indicating timetable to achieve that level, keeping markets guessing and raising uncertainties. Conceivably, interest rates inflation in the US could come down to 2%, but that could be 3-4 years down the line. US stock market indices face more pressure for the third week in a row, led by large declines in banks, after Fitch ratings signaled a possible downgrade for several banks. Higher for longer rates are only going to worsen capital situation at large and small banks as unrealized losses mount in government securities held by banks. In Europe, the UK market deepened losses in the year so far on the ongoing inflation and supply chain disruptions post-COVID and post-Brexit. In Asia, Hong Kong index extended losses in the year so far after property market conditions worsened and Evergrande Group filed bankruptcy in New York. To put things in perspective, Evergrande Group has about $300 billion in debt, the largest held by any real estate company in the world. The fear of contagion to the other real estate companies and industries dragged market indices down for the second month in a row as policymakers failed to provide stimulus or corrective measures. Moving on to the mergers and acquisitions and IPOs. BAE System agreed to acquire the aviation business of Ball Corp in a deal worth $5.6 billion. As I noted earlier, Evergrande Group filed for bankruptcy protection, but the real estate sector overall is littered with companies with bloated balance sheets. Country Garden halted trading in at least a dozen onshore bonds, and the state-controlled Sino-Ocean suspended trading in debt notes due next year after the company missed interest payments of $21 million. The woes of China's property market dragged commodity prices lower in London as well. VinFast, Vietnam-based electric vehicle company, soared more than 250% in its debut in New York on Wednesday, but the stock cooled in the next 2 days of trading. Now looking closer at the stocks in the news this week. Walmart's sales and earnings were ahead of expectations, but the company offered muted growth outlook. Savers Value Village Inc. jumped almost 10% after the online platform for stocks for second-hand goods reported better than expected sales in the second quarter. UBS voluntarily terminated its loss protection agreement signed at the time of Credit Suisse purchase. U.S. Steel Corporation surged after the steelmaker rejected a buyout offer of $7.3 billion from Cleveland-Cliffs over the weekend. Home builders were in focus after Berkshire Hathaway acquired positions in NVR, Lennar, and D.R. Horton, according to a regulatory filing. Cisco reported better than expected sales and earnings but offered cautious outlook. Regional banks dropped after Fitch said it plans to downgrade banks and banking sector. This comes a week after, or almost a month after, what Moody's had said. Illumina said that the company is under investigation over its acquisition of cancer test developer Grail. Maxion Solar Technologies plunged after it missed its own second quarter sales outlook. Nikola Corp, the maker of electric vehicles in the U.S., recalled 209 electric trucks following an independent investigation of a fire incident. PayPal Inc. appointed a new chief executive officer. Home Depot jumped after the do-it-yourself retailer reported sales declined 2% to almost $43 billion, and the company and the U.S. comparable sales declined 2%. Mercado Libre, the Latin America-focused e-commerce platform, announced appointment of a new chief financial officer. CVS Healthcare plunged as much as 9% after Blue Shield California dropped the company from its primary benefit services and replaced Amazon and Cost Plus drug company to serve its 5 million members. Let's look at the economic releases coming up in the next week. Looking ahead on the economic calendar, existing home sales in the U.S., durable goods orders data in the U.S. are on the deck. Producer price index in Germany and current account deficit or trade surplus, or rather current account balance in Italy, is also awaited in Europe. And the foreign exchange reserves in India are expected to be declared this week. That's all for today. You can read daily market updates on ticker.com and keep up with mutual fund holdings on tickerfunds.com. Thank you very much, and we will see you next week.